everyone, Darko here for your weekly trade example. In today's video I will talk about two trades, or at least two pairs. One of them is what we are looking for in the future, and the other one is the outcome of the trade. Okay, so let's start with the first one. This one is a bit different. I don't think I ever showed any potential trades only based on the yearly necklines. Okay, so let me explain this in great detail. If we go to the yearly chart, okay, you have a very strong significant neckline combined with this pin bar reversal, which reacted perfectly with this neckline in here. Okay, so my bias for this year on Euro CAD is long or bullish. Okay, so when I take a bullish trade on this pair, I usually trail my stop loss until I get stopped out to get most out of that trade. So what I'm seeing in here, if I grab my pen for you, is that we have this neckline, okay, combined with this strong, this is a yearly chart. I'm not talking about a tick chart or 5-minute chart or hourly chart. This is a yearly candle. Okay, it closed very, very bullish, reacting from this level in here. Okay, so what I do see happening, or at least what my analysis tells me, is that this year will probably close as close to these necklines as possible. Okay, so if that's the case, how can I involve myself in a long-term trading opportunity to maximize my profit until we reach these two necklines on a yearly chart? Now when I have a bias, I don't need to be right on the bias, the same for you, but you need to have, you know, an idea of if you want to be long or short on a pair long term. Okay, and my rules tells me that once you have a neckline, you always needs to go 2 time frames below. Because this is a yearly chart, 2 time frames below is the weekly, and I'm not adjusting the neckline based on what's happening on the monthly and weekly. You can do so in other cases. So in this specific case, price with, you know, this neckline in here combines perfectly on a weekly chart. The same with this neckline in here. You see how well price has respected that level and bouncing back and forth. That's what I usually do. So in this specific case, I just go back and mark that yearly neckline without changing it to see how that plays out perfectly on the 2 time frames below. Okay, so if we just pretend that this is our weekly chart, we just pretend this is our weekly chart, we go 2 time frames below to the 4-hour charts, do you think we would have been in this trade already? Yes. Why? Because we wait for a pattern, and that pattern would have been a set and forget. Price you know, goes down deep enough to use as a natural stop, then we convincingly reestablish with some background space. I know it's a bit shallow background space, but it's nonetheless a background space. Like this candle is clearly, you know, open, close, high and low, clearly away from this significant neckline. So this would have been the entry with a low stop loss aiming to the upside. Okay, but because it's a yearly chart, the stop loss will be very, very wide. Most people have small accounts, and it's not suitable to trade you know, the yearly necklines and have almost like a 350 pip stop loss. Nothing wrong with it if your account allows that, because the risk is still the same regardless if you have like 500 pip stop loss or if you have 50 pip stop loss. The only difference is you trade more lots when you have less, you know, when the stop loss is smaller. Okay, so how can I involve myself in a trading opportunity based on the yearly necklines without, you know, need to have like 350 or 400 pip stop loss? Well, in this specific case, you could wait for a monthly ACAT or a weekly ACAT or a daily move, but in this specific case, I want to see how price is behaving, like, you know, pure price action reading you know, the necklines, and wait for a swing break or a rotation or a set and forget. So in this specific case, if we just analyze the charts, we see how we have some micro swing. Just for the sake of this example, we just draw it in here. We took out these highs, did some structure damage. We pulled back into support. Then we do another higher high, higher close. Price comes down, finds support, okay, and then makes another higher high, higher close. But something happened in here, okay. Price went down and double topped, okay, and when we dropped, we took out these lows. That's not bullish. That's actually on the contrary. That's bearish. So do I want to involve myself in a yearly trading opportunity on a smaller stop loss when the daily chart just turned bearish? Okay. Before I do this line in here, there's actually a minor swing that grabbed my attention. Okay, so we double topped, we went back, we made a minor swing, and then we did this. So we have a level that I will be watching for structure damage in order to involve myself in a potential longing opportunity. So for instance, let's just assume, or at least, like if price do this, okay, if this happens, then we are doing a bullish swing break, structure damage in alignment with my underlying bias, which is long. And if that's the case, I have a very strong significant neckline on a daily chart that suits me, suits the trade for a long opportunity in here with a low stop loss. I will probably give it more than 25 pips, okay, and then looking for this. And obviously this needs to be monitored live, and this is a daily chart. We have plenty of times to analyze this for the paying clients within the paid membership, because price could very well go up into this level and make another lower high and a lower low, and then give us that swing break. Okay, so that's what is on our radar when it comes to Euro CAD for the future. Okay, we had a smashing trade on Kiwi yen. If I'm not mistaken, we talked about this in one of my videos, social media videos, where we entered exactly down in here. Sorry, I think the entry was on this, based on this daily neckline. Okay, and that was based on prices retracing back into a monthly and weekly support. Okay, we had a monthly ACAT, a daily pattern. So there was like a no-brainer trade. So we entered this trade, if I'm not mistaken, it was like around 170 pip stop loss. If I take from here down to here, actually less, 120 plus 25. So yeah, just around 150 pips, and I just took 500 pips of that trade, just under 500 pips. Okay, so that was a huge winner, and you only need one or two of these trades each month to actually delete all the losing trades or whatever you are. Just you don't need many of these trades every month to be in huge profit on your live account. Okay, so I was wanted to talk about. So it was, like I said, a no-brainer entry, and then we scaled something off, took out the risk when price hit a certain level, and then we reduced our stop loss, and then waited for the target. And obviously all these levels were pointed out in advance within the paid membership, and I usually don't wait for the last pip. So somewhere in here I just said, you know what, I'm done. I'm very pleased with this trade. Let's just do not wait for that, just the last pips. I don't want to turn like 500 pips straight into a 300 pips straight just because I waited for another like 10, 25 pips short from that level. So yeah, those are the trades that I was referring to, and I hope that you enjoy this video. If you do so, make sure that you hit the like button and encourage me to record more of these videos for you. Okay, and if you have any requests on any pairs, or if you want to have a price action reading session or anything, just let me know and I will be more than happy to record that for you. I wish you a fantastic trading week, and until next time, stay safe and take care. Cheers.